I'd like to thank you again for joining us, both in person and remotely. Today I have another very distinguished guest for you guys, Nathan, the founder and CEO of Ondo. Nathan Allman is one of the few founders building a protocol focused not just on issuing tokenized assets, but also building core digital asset infrastructure. Through innovations like Ondo chain and Ondo global markets, he's remanaging what happens when the infrastructure of finance itself becomes programmable and where liquidity, pricing, risk management, coordination happen natively on-chain. Nathan, as you know, financial institutions have spent decades optimizing around clearinghouses, custodians, you name it, very discrete financial primitives and functions that with very clearly defined boundaries. But you guys are bringing all of that on-chain in such a way that all this coordination between all these financial primitives happens seamlessly on-chain. From your perspective, what does rethinking market infrastructure from first principles unlock?
Yeah, so thank you so much for having me. There's a lot that we're focused on at Ondo, but I think for now, we'll center the conversation around global markets, which is our tokenized stocks platform that we launched a couple months ago. You can think of it as stablecoins for stocks. And so in this context, what it unlocks primarily is global distribution, right? These products make it possible for investors all around the world, including in emerging markets in Turkey, Latin America, Southeast Asia, to have high quality access, with great liquidity, great investor protections to US financial assets, treasuries, stocks, bonds, ETFs. That's number one. Number two, which is going to take a little bit longer to emerge, is making it possible for investors to use these assets as collateral for margin, for derivatives, to trade them with deep liquidity 24/7. And those types of value propositions have appeal even for investors in the US and other emerging markets that already have access to these assets. So, a lot of what we're doing is taking what's worked well in DeFi, which is this very transparent 24/7 permissionless composable financial ecosystem, but which is built on crypto assets themselves, and reapplying that to traditional markets.
I would like to double click on one of the things that you said, which is utility. Many people, when they discuss DLT and blockchain in the context of capital markets, they always say, "Oh, we have a single source of truth, the golden record. It's about efficiency, it's about the back office." But you mentioned utility, right? You want to bring utility to the investors, right?
Absolutely. I mean, one of the sort of loudest drums I was banging when I started Ondo is that we were against tokenization for tokenization's sake, because before I founded Ondo, I was at Goldman on the digital assets team, and we looked at so many pilot tokenization transactions. I mean, we did one. We helped the European Investment Bank issue a bond on public Ethereum, and these are great first, but it was a lot of innovation theater. It was great, investors took delivery of some security on a blockchain, but there's nothing you could do with it. It wasn't any better than taking it in regular way form. So, folks would just hold it to maturity and that was it. So necessary stepping stones, but I think we're past that as an industry right now. And, we really are only focused on doing things that, are better than they could be done in regular way form.
So in the context of on the global markets, you will be doing the issuance part, you do distribution, but you also provide some of the utility. Is that fair to say?
We've dabbled everywhere in the stack. So we are very much full service in some regard. I mean, backing up a little bit, when we launched our first tokenized treasuries product, January 2023, it was a week later that we launched a DeFi protocol where you could borrow and lend stable coins over collateralized by these tokenized treasuries. That was a fork of Compound with some small modifications, but we thought it was an important proof of concept for how you could use, in that case, even permission security tokens in a permissionless DeFi environment. So yeah, we play around the stack, but we also partner with others. I mean, our Our tokens are in like 100 plus DeFi protocols today. We're making a big BD push with global markets, our stock tokens in particular, at getting them as collateral on lending protocols. Morpho is a big announcement we made recently. And then they are distributed primarily through decentralized exchanges like onchain CowSwap as well.
You also mentioned liquidity. And you guys have been working toward 24/7 global liquidity that breaks through the fragmentation that we see in traditional markets. How does on-chain infrastructure change how and where liquidity forms?
Yeah, we're getting there. I mean, 24/7, at least deep 24/7 liquidity is going to take some time. Right now, our main focus is in making the deep liquidity that already exists for these assets, primarily during lit market hours, but also 24/5. I mean, there are ATSs like Blue Ocean, in the US that do have 24/5 liquidity. So we are very focused on making that natively accessible on chain. And we have a pretty unique liquidity model where investors can go to secondary market venues, make a request to buy a stock token, and some other party can fill that request on a real-time basis by coming to us, minting the stock token. We buy the underlying stock on the actual underlying securities market, and then send them the stock token, and they can send it to that investor in real time. So that brings the deep liquidity that already exists on chain. The next step is like forming new liquidity on chain that doesn't already exist traditionally, and we're not really there yet. I mean, technically these tokens can and do a little bit trade 24/7, but there's almost no liquidity over the weekend. And I'm not quite sure how long that's going to take. I mean, it's a little bit of a chicken and egg problem. Market makers don't want to get too active there until there's more appetite from retail. So it's not our core focus today.
So maybe the utility that you guys are bringing to the table might unlock that. It might help break this chicken and egg cycle.
Yeah, it's certainly a stepping stone towards it.
So we're discussing global liquidity, and technically that's doable, but different jurisdictions have different rules. So you see a future where we end up with, again, global liquidity, but different pockets of liquidity, or you think a future where actually everything is global, this one liquidity pool is realistic? And what's your take on it?
Yeah, so in crypto, we generally operate with this model of pre-funding everything, right? I mean, people in crypto love to hate on clearing and settlement, especially delayed settlement, and often deeply believe that all trades should settle on a real-time, gross settlement basis. That's great in that you don't have settlement risk, but the downside of that is you have to pre-fund liquidity on a bunch of different venues, right? A bunch of different decentralized exchanges, a bunch of different centralized exchanges, on the DEX side, on a bunch of different chains. And when you're talking about thousands of public securities, that becomes totally cost prohibitive. So we do need a delayed settlement, clearing layer for these sorts of products, and certainly that's something that that we are working on. So I don't think we're going to end up in a world where we have fragmented liquidity on hundreds of different venues like for tokenized stocks
and different jurisdictions. And
that is sort of the world that we're in today, because crypto infrastructure just doesn't really support at scale delayed settlement, and that's why we've built this this sort of liquidity solution that we did with the RFQ decentralized exchanges, which is sort of a pocket of the space that does support that. But we need new solutions for the rest of the space, and that's definitely something we're working on.
So on a different note, on-chain markets offer real-time pricing and observable risk. But when everything is visible, what becomes the new source of information advantage?
That is a great question. I mean, certainly we've seen a lot of traders try to copy trade and exploit different signals that can be sleuthed from the transparency of the blockchain. And I think that is definitely of concern for some institutional market participants, and there are going to be privacy solutions, brought to bear to protect that edge for, more institutional market participants. But it's not an easy problem, so it'll take some time.
Institutional adoption. Ondo and Chainlink have been working on that space together for a while, but as institutions explore on-chain markets, there is a tension between openness and control, as we just discussed. Do you think we are headed toward a shared open infrastructure, or a world where each institution builds its own walled garden to an extent?
Yeah, it's a great question. There's a lot of different lenses to look at this from. I mean, one that comes to mind is the fact that, especially for retail in the US today, traders definitely have a walled garden experience where every broker-dealer, provides trade execution, margin, custody, the whole 9 yards. And if you want to get a different service from a different provider, you have to move all your securities elsewhere, which takes days and, is very cumbersome. And you can't shop in a piecewise manner like you can in DeFi. So I think DeFi is fundamentally more open in that respect, and users can choose where to custody their assets separately from where they get different financial services, and they can shop for those services in a piecewise manner. So we are very focused on maintaining that openness as we reapply DeFi towards traditional markets. I do expect, and there already is some resistance from some incumbents, towards that change, and so that's a tension that will have to be fought. On the infrastructure part, I think we're going to see a continued proliferation of institutions wanting to issue their own chains. Most of them will fail, but some of them, we're certainly going to live in a very, very multi-chain world, and we already do to some degree. And so, that's where it's great to have partners like Chainlink that can, bridge all of that infrastructure together. And a great example of that is the work we did with JP Morgan. They have their own chain, the Connexus permission chain. We have a chain that we're working on, Ondo chain, which we're going to have a lot of institutional validators participating in it, including those who are making their own chain. So there's a lot of overlap here. But this work we did a few months ago, we made it possible for an investor to go from a tokenized deposit on JP Morgan's chain to a tokenized treasury on Ondo chain. It was sort of the first pilot transaction on Ondo chain, and that was enabled through Chainlink's cross-chain messaging system. So I do think there will be some land grab, if you will, but I'm hopeful that it's not going to degrade the user experience too much, and that from a practical perspective, we'll end up in a world that is much more open and accessible.
And I think things like what we did with JP Morgan might help bring more institutional adoption. But do you see any additional catalysts that will finally bring institutional capital at a scale?
Oh yeah, regulatory clarity is, here/on the horizon, depending on what the issue is. We acquired a BD, an ATS, a TA to, double down on the, more regulated pathway in the US. As we have alluded to, most of our offerings are only available outside the US today. Regulatory clarity for stablecoins is a big one, as we think about tokenized treasuries, which is still our main product. The ability to go 24/7 instantly between stablecoins and tokenized treasuries is a huge part of their value prop. So now that institutions can actually, get comfortable holding stablecoins, that starts to become more compelling to them. That's the big unlock, and that's really going to unlock the floodgates for what's to come.
So hopefully the floodgates are half open. So in that context, what do you guys have for us in the pipeline, product-wise?
Oh boy. So I guess some alpha leaks. We are working on margin, so leverage for the spot security tokens. We've really felt from the beginning it's important that holders of the tokenized stocks are on level ground with holders of the underlying stocks. And our first focus was making the liquidity to buy and sell as deep. And I think the next obvious one is providing access to the same sort of margin capabilities. So that is a huge focus. We are also planning to make some moves in the derivative space. Perp equities are very, very exciting right now. So hope to make some announcements soon on that front.
So thank you for the teaser. Stay tuned. Thank you, Nathan.
Great,
it was
thanks
a pleasure.
a lot.
Enjoy the rest of the conference. Thank you.